Good morning and welcome everyone to our group risk panel discussion. Like retirement savings and medical aid, group risk insurance is an important employee benefit and in many cases a key part of an employer's value proposition to its employees. Today we are joined by a panel of experts who will share some valuable insights and discuss trends in the group risk industry. Our panelists include San-Marié Crause, who is the Managing Executive for Sanlam Group Risk at Sanlam Corporate, Rudi van Rooyen, who is the Executive Head of Actuarial at Hollard Group Risk, Brice Salence Nunes, who is the Head of Customer Proposition at Mutual Group Assurance Products. Collectively, the businesses represented account for around half of the group risk insurance premiums in the market, so we can definitely count on our panelists to share some very valuable insights. Morning, everyone. Perhaps to start off our discussion today, right? In recent years, many people have viewed group risk as just a commodity, right? So perhaps to start with the first question, like why do you believe group risk benefits or products are important for employers and their employees, and why should it not just be seen as a commodity? Perhaps, Brice, we can start with you.
Sure. So I think when we look at group risk benefits, we're really meeting two aims when it comes to the employee perspective and to the employer perspective. For employees, we're really providing that safety net, helping them with financial vulnerability in times of need for both themselves and their family when it comes to death or incidents of disability. And I think that's a fundamental need that they're able to get through the group risk mechanism, which is really valuable because it's compulsory cover. So we really benefit through that cross-subsidy approach that there's a wide reach. So I think when we come to group risk products, it's really pivotal for employees to be able to get access to insurance cover where they may not have been able to do so easily in the individual capacity. And I think if we look on the employer side, group risk is often underlooked in terms of the value it adds from an operational perspective and assisting in managing that holistic value chain for employers, attracting, retaining staff, and also helping through uncertain times when someone's off on disability. How do they reintegrate into the workplace? How do we help transition a smooth rehabilitation, a return to work program? And I think group risk is often undervalued when it comes to that pivotal role it plays from an employer perspective in managing that claimant, helping reintegrate, because effectively a healthy, happy workforce is ultimately best for employers' bottom line. So I think, from my perspective personally, when we look at employee benefits and group risk from a commoditized perspective, I think we lose a lot of that human element that is really pivotal to a lot of the products, especially when we talk about income disability products and that role that rehabilitation case management can play in reintegrating people effectively into the workforce and helping employers really manage their workforce sustainably.
Oh, thank you, Brice. San-Marié, I don't know, do you have any additional thoughts to share?
Yes, I agree with most of what Brice said. I think in the industry, some of the language we use, like employees and employers, sometimes desensitizes us to the heart of the matter. What we're dealing with here are breadwinners, okay? And in South Africa, breadwinners are really precious because of our unemployment rate here. Most breadwinners, the research shows that most breadwinners support at least 4 people and have got a lot of responsibility beyond just the nuclear family. It's not just mom, dad, and the 2 kids. So it is absolutely critical that we don't just, as an industry, worry about whether these breadwinners can retire comfortably, which we do very well, but also understand, and here I'm going to sound like an actuary for a moment, that it's a statistical certainty that we will lose some of these breadwinners along the way, and that is a catastrophe for a family. So our job as the group risk industry is to make sure that we protect families who are in that situation. In terms of the commoditization of it, so this is now the product that is supposedly just a commodity. It is that important for society. In terms of the commoditization, Brice mentioned that income disability benefits and rehabilitation and those types of factors can be interfered with by moving the product all the time, as happens in the market sometimes. I do think if you just think of a logical example, right, if you were a landlord and you had a tenant for just a year and you were also a tenant and you were moving your lease every single year, the investment in the relationship between those two parties is a bit different. Aside from all the trouble you go to move your lease every year and to move your flat every year. And you can think of moving a group risk scheme a little bit like that. If you move it every year, the relationship doesn't develop to the same extent, and there's a lot of wasted energy going on. So, I mean, at Sanlam, we tend to focus on the sustainability of rates. The industry is very competitive, so it's not that we're not offering good rates as an industry to members. But sustainability of rates is important, and the experienced practitioners in the industry know when a rate is too low and that you're just putting that scheme on a roller coaster for the next couple of years. And I'm not convinced that is in the interests of the stakeholders in the industry, but it certainly isn't in the interests of members.
Oh, thank you, San-Marié. Perhaps I want to pick on that one thing you just mentioned now around breadwinners, right? Because preparing for these discussions, right, the one interesting thing that I picked up is only around 10% of South Africans actually have some form of life insurance, right? So that obviously means that South Africans are underinsured. So how does group risk play a part in this, right? Perhaps, Rudi, you can share some of your thoughts on that.
Yeah, I think, like you said, I think a lot of the research and industry stats show that, in general, the population is underinsured. I think where group risk comes in is the fact that it's provided through employers or through retirement funds, and it is a compulsory benefit, usually as part of your employee benefits package. So that helps to at least provide a basic level of cover for all your employees or your members. And I think in a situation where the economy is not doing great and people are pressed, how do they actually spend their income? I think insurance and probably savings is always the first to go out of the budget. And having it as a compulsory nature, at least know that the members have their basic level of cover, and that there's no, let's call it an option for them to do away with it. And like San-Marié said, that for breadwinners, it's such a crucial benefit to have. So group insurance play a big role in that. The other part that's quite nice about group insurance compared to taking out an individual policy is we provide something that we call free cover limit. So that means members get a level of, up to a certain level of cover without having to go for underwriting. So that also helps to provide insurance to people that would otherwise, in their individual capacity, would not be able to get insurance. So a combination of that and the compulsory nature, I think, makes group insurance quite a valuable proposition for employers to offer their employees.
And then, Brice, I don't know if you have any additional thoughts.
So I think just to reiterate, I mean, there's a huge underinsurance gap in South Africa. I think the latest ACISA study was quoting figures of around 34 trillion rand, which is about 15 times the national budget. So that is significant. So I think group risk plays, as Rudi said, that pivotal role in sort of accessing and creating mechanisms for people to get cost-effective cover that is accessible, affordable, and, as Rudi said, with those certain terms and conditions, that is a lot more easy to get cover than trying to get cover in your retail capacity and on your individual capacity. A lot of the terms and conditions are often a lot simpler to get access to cover immediately if you move between different employers. And I think also the portability aspect from a product development perspective. So a lot of products are designed so that if you leave your employer, you can convert that cover in your individual capacity, so you don't necessarily necessarily lose that cover completely. And I think that's a lot of the concern that people have with group risk, is that once you leave, do you lose that cover completely? And that isn't always the case. And I think products can be designed in a way that continuation or portability is really valuable, especially in addressing that underinsurance gap that we see. So I think a lot of the product features help in that, but I think we still have a long way to go as an industry and as South Africa to get a lot more people insured. And I think a lot of as San-Marié said, it's this balancing act between risk and retirement. And I think one of the challenges that often the contribution to risk and retirement is set at an overall level, percentage level. And then there's this balance between managing your group risk cost and the amount that goes towards retirement savings. So how do we effectively balance that short-term need, that financial strain that can really devastate families, with that long-term need that we really need to help people boost and save towards retirement? So I think it's that delicate balancing act that's also a challenge within the industry to ensure that we get that right for better outcomes for different aims.
Okay, cool. But there's perhaps just one additional question that I do want to ask around, with, you mentioned terms and conditions, Brice, and Rudi, maybe I can position this with you around where people buy additional cover, right? To cover that underinsurance piece, around aggregation with disability benefits. How does that work, right?
Yeah, so I think when we talk about aggregation, it's almost the opposite of underinsurance. Yes. It comes to overinsurance. So aggregation is a principle that we apply across the industry. We look at what's the benefit that someone is insured for income disability, and make sure that they're not in a better position than what they were before disability. So if I can use an example, if someone's salary is, say, 50,000 per month while they were still working, but they take out 5 policies that will pay out 50,000 Rand each when they become disabled, then that's a form of overinsurance, because it's much higher than what they earned before. So the principle of insurance is to not put someone in a better position than what they were before an event happens. But I think the important part of it is also our products that we give is priced to be affordable, but then also sustainable. And you can think of any business, if your costs keep on increasing, there's 2 ways to manage it. Either you find a way to manage your cost, or you increase your price. And if you continuously increase your price, it will get to a point where it's unaffordable, or your business will close down, so it's not sustainable. So aggregation is a way for us to say we limit it to the 50,000. That's a way for us to manage the cost, but also to, and it's to the point that Brice made, to try and get the person back to work. You can imagine if someone is disabled and there is still a possibility of returning to work, but they're now in disability earning 250,000 a month, where they know if they return to work, it will be down to 50,000. You don't have any incentive to get the person back to work. So your cost will just increase so much, and at the end, it's all your other members, all your active members that's paying the premium monthly that will bear the brunt of that overinsurance. So I think it's maybe a complicated matter, but I think that's where financial advisors play a big role when they look at members or clients to see, but does it match your need? Are you not overinsured? So I think they play a key role in that.
Yeah, I think you've already highlighted the actual point, like I was looking to make, just around that importance of advice or advisors. Perhaps considering underinsurance, potentially overinsurance, claims, right? I assume that to be a big part of what keeps insurers busy. So, and reading one of these World Health Organization stats that says 1 in 5 people, right, might have some form of cancer in their lifetime. How do you guys like how do you manage these type of risks? Like, I don't know, maybe San-Marié, we can start with you.
Yes, so the statistic that you referenced there is one of those statistics that one sees, and there's various versions of it around. You'll see 1 in 7 or 1 in 8 or 1 in 5, depending on what country you're looking at and what gender and so on. I think in the South African local situation, and for me in the Sanlam book, what we see is that cancer is an enormously impactful cause of claim. So on our income disability claims at the moment, we're seeing just about 20% of all the claims have cancer involved in the claim. And then on severe illness, as you would expect, it's even higher. It's more than 50% of the claims are due to cancer. So that shows that it's a very impactful disease. We've also seen in the last few years, post-COVID, that those proportions have been increasing. So the proportions of the total claims that are due to cancer are bigger now than they were 3 to 4 years ago. One can talk, and there are various theories and research being done as to why that is the case. But I think in terms of the disease itself, it's safe to say it's very impactful. I mean, in my own family, for example, I've lost both my parents to cancer, my mom in her 50s and my dad in his 70s. So I've got some first-hand experience of the impact it has on a family. In the group risk environment, the obvious benefit that one thinks of when you talk about cancer are the severe illness benefits. And we have a tendency, I guess, in the industry, due to the cost constraints that Brice also referenced, to regard severe illness cover as a bit of a luxury benefit, not something that's for all employers or for all employees. But that impact is quite indiscriminate across income groups. And it really came home to me recently. Sanlam did a series of videos where we actually used some of our real members to talk about what group risk cover meant for them and how they think about the risk that their family is exposed to. And one of these videos was a man named Lwandile, who is a market worker. He gets up at 10 to 3 every morning and goes and works in a place like the Epping Market. And they asked him what his worries were with regards to his family and what he would like his employer to make provision for. And he referenced almost the same example that I just referenced. He says, my mother had cancer and I worry that something like that would happen to me and what would happen to my children if that's the case. So I think the point I'm trying to make is severe illness is not a luxury benefit. It's something that is relevant to higher income members as well as the much more vulnerable end of our market in group risk. And it's a very, very important benefit to get right and to make sure that the cover is also defined in an inclusive and balanced way, not just in a technical way that's only understood by the industry.
Cool. Thank you, San-Marié. And Brice and Rudi, are there any other trends that are topical today? Brice, we can maybe start with you.
Yeah, so I think one of the emerging trends that we're seeing at the moment, and it has been emerging for the last couple of years, is around mental health. So on Old Mutual's portfolio, we've seen a substantial increase, almost 60%, in the proportion of claims on the income disability side that we're seeing due to mental health. And I think it's a pivotal area for us to understand and see how our products are reacting to that. I think one of the key challenges with mental health, especially when it comes to disability products, is the assessment process. So with a lot of the other conditions like cancer, for example, there's a lot of medical tests that can be done that comprehensively show that a person has that disease, whereas with mental health, it's reliant on a lot of self-reporting through the process. So there's a lot of challenges from a claims assessment perspective. But we definitely have been seeing a big increase in that, and that really lends us to believe what more can we do to support employers, employees, to try and boost overall wellness. And I think when we look at wellness initiatives, how do we expand those to include emotional wellness, financial wellness? We also see a strong link between financial stress and mental health, and individuals who really are worried about their financial situation are more likely to struggle with mental health conditions. So I think that's certainly an emerging trend that we're seeing all around. So that's something to definitely to keep an eye on. And from an employer perspective, the sooner that a claim can be notified, the better that we have a chance of rehabilitating, getting intervention programs. A lot of the statistics show that the longer a person with mental health has been off work, the longer they will then be off. And these are generally long-term claims, which again, as Rudi said, leads to that cost driver approach that we're seeing. But I think the newest trend that it's not necessarily yet hitting our portfolios from a claims perspective, but something that Old Mutual has definitely been investigating, understanding, trying to create a lot of media presence around it is the impact of the US aid cut, and what that could mean for the industry in coming years. So that's one of those things where, for example, on the HIV side, there's been about a 25% cut in the funding. On the TB side, it's around 30%. So those are huge gaps that we need to fill as a South African market. And I think we've made huge strides in the fight against HIV and TB over the last few decades, and we've made significant progress. And we've seen that through a lot of our industries that have a lot more improved experience now compared to many years ago, for example, in the mining sector. So I think for us, it's to understand how that will play out in the next couple of months and what type of, initiatives will be put in place to try and beat that funding gap. And I think one of the main concerns at the moment is that the funding gap, a lot of that gap is related to very strategic initiatives. So it's around a lot of research campaigns, a lot of prevention campaigns, testing campaigns. And what will that mean going forward? It's not one of those things where with COVID we saw the hospitals were overflowing, almost overnight, and we were able to react. These are the type of trends that we're going to see slowly emerging, especially on the HIV side, and what that could look like for our claims. For TB, we know that, if someone has TB, they're usually off for about 6 months getting treatment, so that could start impacting on disability claims going forward. So I think there's definitely a lot that we need to understand and unpack from a claims perspective, and specifically from an employer perspective to understand, is your workforce affected by this? Is there something more that needs to be done from a wellness initiative perspective? Maybe a boost again in testing campaigns, because I think some of the recent stats I saw that there's been a 21% drop in the HIV testing over the last couple of months. And that's significant. So I think it's one of those things that, hasn't had a direct impact now, but it's definitely something that we need to be aware of and see how that unfolds over time.
Rudi?
Yeah, I think maybe another trend that we see more and more is around obesity. So there's a lot of studies showing that obesity doubled in the last 25 years and actually tripled in the last 50 years. So one can see it is an increasing trend. I think the HSRC recently did a study where I think more than 50% of South Africans have been classified as obese or overweight, and from that, say, a group of 27% was seen as obese. So there's quite a big trend on that. We also see obesity in children, which is quite a scary one. I think it's predicted that globally, in 10 years' time, 1 in 5 children will be obese, which is quite scary. If one think there's a research showing that someone that's obese in their childhood is much more likely to be obese as an adult. So the question is, okay, how does that affect group risk in our environment? But the reality is those children are your future workforce. So that's the people that we will insure in the future, and that's also the people that will work for employers. So obesity in children is quite a big concern. I think the other part is also, okay, why is obesity so important? And I think obesity is almost an underlying devil with many of the other illnesses. There's a strong link of obesity and increased risk in hypertension, type 2 diabetes, heart conditions, and even cancers, and also mental health, which I think is what Brice spoke about, anxiety and depression. So obesity is almost a loaded gun, and then other factors pulls the trigger, which is quite a scary one. And if one look at what's the reasons of the causes of obesity, there's quite a few. I think it's ultra-processed food and sugary drinks. I think in some countries they say it makes up 50% of people's diet is that. So that's quite a scary stat. Then also, I think affordability. We spoke quite a lot about affordability earlier, and I think to buy processed food is much more affordable than buying healthy food these days. It's also much easier to make a packet of 2-minute noodles than something else, I know from my kids. So I think it's just the lifestyles that's leading to that. I think urbanization is also one where people are less active. They're moving to the city. Fast food is much more easier to come by. There's less physical activity. I think if we look at our jobs in general, it's more sitting in front of a computer the whole day, so less physical activity. I think all those things just continuously add up. Screening time is another one. If you think about a Sunday afternoon a few years ago would be you watch your TV program for 2 hours and then it's over, and then you, as a kid, you play outside or you do something with a family, but it's usually outside. We now you have the likes of a Netflix and Amazon and Disney and Apple, so it's that continuous entertainment, and it's not even to talk about cell phones and the screen time that you can use there. But I think for kids, they get that immediate gratification by just sitting and watching screens instead of playing outside. So I think there's a lot of small things that just adds up, and that's creating the trend, and obviously it fuels all the other illnesses that we see. I think in terms of maybe other things that's happening in the industry is also the studies around genetic predisposition, which is something that's quite interesting, and we see more and more of that in how one's genes actually makes you predisposition to get certain illnesses or increase your risk to get those illnesses. And there's more and more identification of it and seeing how it fits in. I think definitely on the mental health side, there's a big predisposition to specific genes that can lead to mental illnesses. So that's quite an interesting one to keep our eye on and see, okay, but how can one identify it maybe earlier? I always say prevention is better than cure. So if one can prevent it and rather not get to a claim stage, that's obviously a win for everyone.
And then maybe on that, has there been changes to your products to account for these trends? And San-Marié, I don't know.
Yes, Ielyaas, I spoke about cancer. So there are actually, some of these products are less known, but there are actually cancer-specific products available in group risk. In Sanlam, we've got the Impact range, which is a cancer-specific benefit, just covering that condition, as opposed to the full range of severe illnesses that are typically covered under those products. The objective of a product like that, the obvious objective is to make it more accessible, while still paying attention that the product is as inclusive as possible. So they're typically cheaper, more affordable, but covers a wide range of cancer conditions. And yeah, the idea is that it makes it accessible to more funds and to more employers. So that is an example of a specific product. I do think in the employee benefits industry, it will be the mainstream products that we have to get right. Okay, so we're going to have group life cover, and disability cover is still going to be the dominant benefits in the industry. And it is getting the management of all these conditions that we talked about right, so that we keep those products affordable and that we keep them doing what members expect them to do. because it is not a good experience for anyone, for the consultant or for the employer, and least of all for the member, if they expect to be covered by a benefit and then it turns out that they are not, because it's the expectations aren't aligned and people are managing the claims aggressively and that type of thing. So it's across all the conditions, and it is really in the mainstream products where we have to get it right. Also, as we start integrating more, with the medical aid industry and primary health insurance benefits, I think the industry is moving in that direction, where it'll be more of a one-stop shop and a one contact point experience for members. Certainly, that's where we're focusing. And once you've got a member in that continuum of benefits, your possibilities for really influencing their health outcome and changing it before they become a permanent disability claimant, it becomes much more possible to do that. And ultimately, that's what we'd like to do, because it hits all the points. It gets the affordability, it makes sure that the member has a better life, the employer has their employees at work. So that's really the perfect outcome, the holy grail that we're seeking in the industry, right?
Yeah. Maybe, Rudi, just touching on one of the points San-Marié made now around aligning all of these things, right? And to the point that death and disability are the most common benefits. In the case of some of these severe illnesses, is disability income or a disability income benefit enough?
Yeah, so I think one needs to understand the purpose of each product. So if you look at disability income, the purpose is to replace your income. So if you are unable to perform your duties or do your work, that is when your disability income kicks in. But sometimes you get cases where someone is critically ill and they can get treatment and return to work. So in those cases, quite often your disability income product won't kick in, but that's where something like a critical illness product comes in. So I think to San-Marié's point, I think it's all about the balance. I think all the products are out there to cater for different needs, but you always need to find that balance between what's affordable, what's the needs, and which products are the most important. But I think quite often people have the perception that if you have medical aid and, say, gap cover and disability cover, then you're okay, you don't need something like a critical illness. But that's not always the case. And I think it is really important, coming back again to financial advisors, giving that advice and saying, but okay, let's really look at needs and what do we have available. But it is such a difficult balancing act, especially if you take retirement savings into account, to what Brice said, to make sure that you balance retirement and medical aid and death cover and disability and critical illness. But it is a very, very important one. I think as insurers, we try to educate members and employers and financial advisors on these are the products and these are the different needs. But we also need to promote the awareness of the illnesses, because sometimes people also they just look at the product but forget about the illnesses. So I think a lot of insurers also try to promote and educate around the illnesses and the trends that we spoke about. At Hollard, we have the annual Daredevil run, where men and boys do a 5K run in Speedos, but it's to create that awareness of prostate and testicular cancer, and to just create that awareness to say, okay, but we have a product to also help for that, and to encourage people to go for tests. And I think those type of initiatives also help quite a lot. So we'll organize you a Speedo for this year's event, Ielyaas.
Cool. And then, Brice, maybe just are there any other practical steps employers can take, right, to at least create the awareness that Rudi was referring to?
Yeah, I think there's a lot of steps that employers can take, especially around that member education piece. I think a lot of the I guess the benefits is almost lost in translation, where their relationship is often with the insurer and the employer, and then it's how do we leverage the employer to, disseminate the information on what benefits are covered, how do we help them explain it in simple terms. And I think one of the key pieces that we've often struggled with as an industry is getting access to that end member eventually. And I think there's a lot of innovation we'll start seeing now, leveraging AI technology to really try and access that end member. And I think that's super important when it also comes to that insurance gap that we chatted about earlier, so that, how do we help the end member understand their needs, what they're covered for, what other benefits they need to take out in their personal capacity if they don't have. So how do we link that financial advice piece also to the end member? Because if we look at critical illness, for example, we see that it's a tiny proportion of the market. I think it's almost 3%, if that, of the total group risk market from a premium perspective in South Africa, which is really, really small. So although the products are there and they're great and they cover great events that happen, to get that covered, that somebody who have had a traumatic incident, they would get that cover. We're just not seeing that penetration. And again, it comes back to that cost versus benefit, and all the other products that are in the suite, and which one is more beneficial. So I think from an employer perspective is really working through the suite of products available, what their workforce needs would look like, and helping in terms of upskilling the member education piece. I think another important point that employers play, especially linking back to mental health, a lot of the disability conditions, is that active role in the claims management process. I think a lot of employers often underestimate the role that they do play in that process, and we've seen that employers that are very involved in the process, working with HR, looking for alternative work that a person can go into, because just because you can't do your own occupation, there could be another role within the company that you would be able to do, and we would accommodate that person. So we see that employers that are really proactive and supportive of that return to work rehabilitation program really have better outcomes overall for both the employee base and also from a cost perspective. So I think that's very valuable, the role that they can play from a group risk perspective.
Cool. Thank you. We're now on this topic around educating members, and at the recent Sanlam benchmark, what was highlighted was that out of the employee benefits suite of products, right, which includes retirement savings, medical aid, and group risk, group risk is the one product that is least understood by members. And so I know we spoke now, or Brice spoke now, about the role the employers play. Right? What have perhaps you guys done from your business perspective to address this, or to further educate members, consultants, and employers? Maybe, Rudi, we can start with you.
Yeah, I think there's quite a few channels that one can use. I think something like Through the Noise, events like this really helps a lot to just get a message out and say, okay, but you have these products, and to talk a bit about that and the trends. Also using things like webinars and news articles. I think you often see news articles around things that's applicable. We also, in terms of helping financial advisors, we have product trainings on a regular basis, and webinars for them specifically to also help to upskill them. I think with reaching the employees, it's always a more difficult thing to do in a group risk environment than your traditional individual life insurance, because on the individual life side, you have direct access to the member or to the policyholder. Where on group risk, you typically work through an intermediary and then an employer, and only then get to the employee. So there's quite a few channels to go through. But I think things like member communication, benefit statements, those type of things, I think is important to just create that awareness for the employees about, okay, this is the cover I have in place, and maybe just start to ask a few questions around it. I think the challenge that we see is even though we have the ability to communicate to members, you also need to make sure that the members actually open the email and read their benefit statement. And I think that becomes a much more trickier thing to do, especially from an insurer's side. You can only do that much. And I think the way we're going to solve this is also through partnerships. It's all the stakeholders need to pull together. As an insurer, we can't achieve that on our own, but also as an employer, you may not have all the information to share with your employees. So I think partnership is for me quite an important one between the insurer, intermediary, employer, and then even the members, to make sure as everyone that's involved in this ecosystem that we try to get to achieve our goal.
And San-Marié, from a Sanlam perspective, has there been anything that you guys have done?
You referenced the benchmark event there, which is a long-standing Sanlam annual event. So I think the educational challenges that we have are different for these different stakeholder groups that we mentioned in the ecosystem. So I typically find that people who work in the industry, consultants and retirement fund trustees, benefits committees, are very knowledgeable. They understand the benefits. So I wouldn't say that's where the heart of the challenge lies. When it comes to employers, yes, the level of knowledge drops significantly, and that's also one of the reasons why we have employers at Benchmark at that event. The challenge with the employers is particularly acute in the claims process, which is kind of where the rubber hits the road, when it's an employer that's very dispersed, very large, and has got branches all over the country, because effectively you often end up dealing with the HR staff member at that area where the member is located, and every time they handle a claim is the first time for them. So the process is confusing, and we do certain things like outbound calls to give people an idea of what to expect during the claims process and so on to manage that. With regards to members, the challenges and the ways to reach them again are different. So there's how we do it today, and you mentioned emails, Rudi, and members who don't open emails. That obviously all of us do that. Sanlam also has all of those means available, and some of the things we do today is, for example, infographics on beneficiary nomination forms, which is quite a hot topic in the industry. We've got those infographics available in 6 languages to make sure that it's accessible to the actual members who are going to read it. So own language content is important with these traditional mediums like email and sending things via phones. We are working on modernizing and trying to educate where members are. We're in a digital world, we're in a world of AI. Sending out webinars and sending out emails, we must continue to do that, but we need to supplement that with modern means of communication. So we are members, they are on WhatsApp, they are in the rewards programs, so people engage with their rewards programs. Earlier I also mentioned the integration of the medical aid, the primary healthcare insurance and the traditional group risk environments. Members interact with their medical aid benefits much more often than they interact with a group risk benefit. So I think where we're taking this conversation from the Sanlam side, and there's significant systems investment involved in getting this right, but where we're taking it is we're putting systems in place so that we can reach members at that point of contact. So when the person for the first time, is seeing on the mental health, the first time we see that they're seeing a psychologist and there's a complicating back condition, which is one of the classic combinations we get on disability claims, you'll find out at the medical aid integration point, right, when the person's there. At that point, you can start the process of hopefully helping that member back on the road to health, but also educating them about their group risk benefits, what they do have available, what they don't have available. That is when it's meaningful. So I'm just trying to give some illustrations of where we're trying to go. I don't think the industry is there yet. As I said, the systems underpinning this type of ambition, or it's complex execution that we are currently busy with. But that is how I think we get the education for members right, by meeting them where they are and earlier on in their health continuum, long before they actually become a 6-month waiting period disability claim. So wish us luck with this investment and getting this right, because I think it's going to make a big difference.
But maybe, with all of these things, the basis of this is information, right, or data. Have you seen an improvement in the data collection or the data provided from employers?
Perhaps I can jump in there and pick on one of my least favorite pieces of data. And I mentioned it briefly in that response, is beneficiary nomination forms, which have become compulsory now for a wider variety of benefits in the group risk arena. Do we have the data available? Well, I wish we had the data available on every single claim. And it's a very material issue. It was actually, from a group risk perspective, the issue we focused on in the 2025 benchmark. As we've done analysis, I think, on a group of about 30,000 claims, and we looked at what's happening in the end-to-end claims process. So not just measuring the traditional SLAs in the industry, but measuring from the date of death all the way through to when money is in the bank account, that sort of processing time. And we looked at the different subgroups of claims, the types of claims that now require beneficiary nomination forms, and the types of claims that don't. And a very large gap is opening up. And that is a data problem, because the beneficiary nomination forms are not readily available across the ecosystem, on the systems, not completed by members. So despite all the education that's being done, that is a huge data gap, and one that worries me intensely. Because if you delay the payment of a claim, we are attacking the fundamentals of what group risk benefits are meant to do. And that is what happens when we don't have a beneficiary nomination form. I see some nods to my right, so I think...
I think just to add to that, it comes back to what I said about partnership. It's, again, something that we as an insurer alone can't tackle and solve. We actually need everyone in the system to help to get that right. And I think there's very creative ways that one can encourage it and make it a lot better and easier to get the members to complete it, but to also record it and keep it on record. But I don't think as an industry, as San-Marié said, we're not there yet. Another form of data is also just the normal monthly data that we get on members in terms of the contact details and ID numbers, etc. I think it's got a lot better in recent years, and regulation like PPR also helps us as an industry to move in the right direction, but we're not there yet. So I think it's that continuous work to just keep on improving it. I think the downstream benefits of getting proper data and utilizing it appropriately for the benefit of the members at the end is just massive. But you need to start with the data, else you're never going to get to where you really want to be.
Yeah, no, because I remember starting my career in group risk, and it's scary to think what were the requirements back then, where data was sent to you once a year.
Yes.
Right?
Yeah.
And that was your management of that scheme.
So we're moving in the right direction, but not
so
there.
We've made a lot of progress.
Yes.
Yes. So, and then maybe just like as a last operational type question, right? Because moving clients, what advisors have highlighted to us has been somewhat of a sticky point, is this like customer due diligence. Right? So I know we don't have a lot of time, but are there any thoughts around like why it is important? It's not something we can avoid.
Yeah, I think it is part of the legislation and complying with FICA is that you have to, as a financial institution, you have to verify your client, get information like their company registration, physical address and IDs of the shareholders or in beneficiaries or beneficial owners. So I think it just becomes more complicated when you don't deal with an individual but with a company. And you can imagine if you have a small South African company that's part of a multinational that's owned by some trust, if you start to ask the overseas people to provide their IDs, it's quite a difficult task. But I think that is where it is part of the requirement. So you go through the process, but it does create a bit of challenges when, say, moving or taking on new clients onboarding or onboarding new clients. So it is something that, as an industry, I think we can also work on and improve, and to see how we can make it an effective process to, again, at the end, not cause any delays of onboarding risk cover. But again, we're working on it, but I think there's a lot of improvement.
No, I mean, I'm also like, it's also a fairly new process, right? Like, so I think we all, with any new processes, there are always challenges. Yeah. So, but hope, yeah, sorry, San-Marié.
I just wanted to add a sort of a broader perspective on that beyond just the requirements. So it's important to keep in mind the context. So the context is that from a financial regulation point of view, South Africa is, as a country, is actually quite well regarded. And this legislation that we're talking about, the Financial Intelligence Centre legislation, it comes off international legislation, and it's part of maintaining that standing international, you know, the international grey listing and all of that. So the bigger picture is, yes, it's a lot of extra work for everyone. But we're doing it to make sure that we maintain our standing as a country internationally, and that is good for our economy. In fact, it's essential for our economy. So maybe that helps a little bit, just, you know, thinking again about the big picture reason why we're doing this work for the country, not just for the individual client in each case.
Yeah, and I think that's often lost when you sort of go into sort of operational mode. We need these documents, and it's sort of that I guess linked to education in some ways. Why are we doing this? Why is it protecting the industry, and how valuable actually these processes are in the end for the country, and not just sort of looking at it from an operational perspective. Sometimes we also need to take that step out, and I think that's valuable to do so.
Cool. Brice, Rudi, San-Marié, thank you for your time, and thank you for your insights. And yeah, it was a great session, and I'm pretty sure we could run this session a lot longer, but yeah, I appreciate the time. Thank you.
Thank you.
Awesome. Thank you very much for having us. Bye.